The first tick on the index on expected lines is on the red side, so 45 points lower on the Nifty.
The mid-caps are outperforming. The frontline indices have seen some profits being taken off. Banks are taking it on the chin. The Nifty is now below that 44,000. Looks like the markets were going to break 18,500 about 10 minutes back, but there has been a little bit of a recovery, particularly the mid-cap index. Pull that up, and it's about a 100-point push up on the mid-cap index just in the last few minutes.
We will end 120 points lower on the Nifty, the banks, which is, by the way, a 0.6% cut. The bank Nifty will end 0.6% lower as well. That's about 270-odd point cut there.
Hello and welcome to Markets Today, the show where we'll track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. Stock markets snap a 4-day winning streak. The Sensex falls over 300 points. The Nifty loses 100 points. Financials lead the decline, even as mid-caps outperform the blue chips. Sun Pharma Biocon surge on drug approvals from the Chinese health authorities, the National Medical Products Administration, NMPA. Meanwhile, Coal India slumps despite announcing price hikes. 3.6 crore shares change hands in HDFC Life as Aberdeen sells its remaining stake in the company, while the promoters of Sona BLW are likely sellers of 2 crore shares in a transaction worth 1,100 crore rupees. Torrent Pharma posts in-line results, but positive commentary aids the stock. Suzlon jumps in posting a turnaround. Lemon Tree gains on margins boost. Patanjali Foods also jumps in good earnings. And Sebi floats a consultation paper with plans to seek more disclosures from high-risk foreign portfolio investors, FPIs. Those with more than 50% stake in a single corporate group may need to reveal ownership details within the next 6 months or face action. This comes after Sebi told Supreme Court that it had drawn a blank in identifying the beneficial owners of 13 FPIs invested in Adani stocks. And here's a lineup of what we have today for you on Markets Today. In Market Opinion, Harsha Upadhyay, Chief Investment Officer for Equity at Kotak Mutual Fund. From markets to corporate, Sunita Reddy, Managing Director at Apollo Hospital, and Himanshu Modi, the CFO at Suzlon Energy, joined in with their outlook. Let's get to the day's trading action then. The Lal Street snapped a 4-day winning streak. The Nifty and the Sensex fell over 0.5%. The fall was led by financials. The Nifty Bank has now slipped below the 44,000 mark. Mid-caps, though, relatively outperformed the blue chips to end the day in the green with a gain of about 0.25%. Prashant is here with the day's market highlights. Prashant.
Well, finally, we saw some profit taking today, which lasted all the way into close and did not get bought into like we've seen so many times in the past. For 4 days in a row, the market had been up and up, adding about 2% or so. And today, after the weak Wall Street handoff, things were looking a little shaky. And the dip got a little deeper towards the second half of the trade. The Nifty and the Bank Nifty up on your screen. Banks, of course, selling off a little bit more. Now, in the broader markets sphere, mid-caps and small caps. Mid-caps in the green. Small cap was the one with a solid 1% gain, even on a day like today. And that showed up in stocks, mind you. I'll get to that in a bit. Now, on the large caps, the losses coming through in names like ONGC, Axis Bank, Reliance, NTPC, HDFC Limited. Gainers in names like Bharti, Kotak and Tech Mahindra. Now we come to the broader markets. Well, advance decline was roughly 1:1, but I think it's completely in favor of advances because when you look at price moves, you must also look at volumes. And the stuff which went up on a lot more volumes as compared to stuff which went down. So here we go. Suzlon, Torrent Pharma, Tega Industries, all earnings-related beats and numbers on your screen in terms of stock prices. Financials and microfinance has been a strong theme. Arman Finance, Spandana, even a housing finance company like PNB Housing, industrials, auto names, Craftsman, Sangvi Movers, GR Infrastructure. In that same light, Dixon, ABB, NRB Bearings doing very well. Textile names like Himmat Singh Ka Seed, Gokul Das, Arvind doing very well. Then Jindal, SAW, KPIT Tech, CDSL, and many more. I mean, you can just see the breadth of the moves that we had in terms of trade. Losers list with volumes much shorter. Adani, Total, Campus, KRBL, Delivery, and a Lumax Tech. That's about it. The question is, if the market were to see some more continued pullback, will some important levels hold? For the Nifty, that comes in about 100 points from where we left off at 18,420. The other question is, will the US rally resume after a break last night? And I think that may answer a lot of questions about what happens here as well when we come back. Back to you.
Thank you very much for that. Let's get some market opinion then. Harsha Upadhyay, Chief Investment Officer for Equity at Kotak Mutual Fund, is of the view that autos and financials will continue to outperform, but he does see some pressure on the manufacturing side. Listen in.
The headline is not only better than the previous 3 quarters, but it is also slightly better than the consensus expectations for this particular quarter. Having said that, I would say that this has been driven mainly by financials and auto in terms of sectors at this point of time. Rest of the manufacturing sectors, for example, have seen further dip in margins or continued pressure on margins due to elevated commodity inflation, and have been disappointing in terms of the results. But in terms of growth, there are many sectors which would probably give you better earnings growth than the market average as you go forward. Already we have 2 sectors which have been driving the overall earnings, which will continue to do well: the financials and the automobile sector, including auto ancillaries.
Okay, let's get to the second headline then. Sun Pharma and Biocon both gain over 1% in trade on the back of drug approvals from the National Medical Products Administration of China. That's their health authority. Ekta joins in with the key details of both these pharma companies. Ekta, which drugs have been approved?
Well, yes, news with regards to Biocon as well as Sun Pharma. Biocon has received an API certification for an immunosuppressant drug from the Chinese regulator. That means that they have received approval for supplying the API for that drug in the Chinese markets. And separately, we do have Sun Pharma, which has received the Chinese regulator nod for a psoriasis drug, which is branded popularly as Illumia in the US markets and other markets, but will be sold under the brand name Illumetri in the Chinese markets. Now, it is important news for both the companies because China is a growing market. It's 9% in terms of entire market share when it comes to the global pharmaceutical space. $121 billion in terms of market size, is growing rapidly in both injectables as well as the biosimilar markets. Hence, this would be an important opportunity for both these companies in terms of the market of China. For Sun Pharma, remember that this particular psoriasis injection is Illumia, which is a part of their specialty portfolio, and in fact has been growing at a rapid pace. $477 million is what they did in FY23, and this Chinese approval, which is expected to probably even be the second largest market after the US for this drug, is expected to add to their revenues.
Thank you very much for that. In more stock-specific news, Coal India slumped over 1%. The company's board has approved an 8% increase in the prices of its high-grade coal. This is the first time that the company has revised prices higher of its coal prices and will be applicable to all its subsidiaries. Yet the stock slumped close to about 1.25%. Vivek is here with more on the news and the developments. Vivek.
Well, a very important development as far as Coal India is concerned. Coal India board has gone ahead and approved a price hike of almost 8% over the existing notified prices for high-grade coal of grades between G2 to G10. Now, this particular development is applicable to all of the subsidiaries of Coal India, and due to this particular upward revision of prices, Coal India will earn approximate incremental revenue of over 2,700 crores for the balance period of FY24. Now, this particular price hike was necessitated by the fact the company actually took wage hike revisions that was announced in January 2023. The board had gone ahead and recommended almost 19% minimum guaranteed benefit for national coal wage agreement. So on the back of that, analysts as well as the street was eagerly anticipating price hikes as far as coal prices were concerned as well. Now, when you're talking about the volumes that are impacted by this particular price hike, almost 30% of the volume would be impacted, and this is in fact for the company the first price hike after January 2018. So Nuvama came out with a report on this particular price hike. They believe that this particular price hike will be applicable to high-grade coal between grades of G2 to G10, and therefore will not be applicable to the power sector, which sees grades of G11 onwards. The price hike implies almost a 3% hike as far as the FSA prices are concerned, and they've gone ahead and raised their FY24 for EBITDA estimates by almost 7%. A positive development as far as Coal India is concerned.
Thank you very much for that. Let's get now to the other third headline, and that is Sona BLW was buzzing in trade on the back of a block deal. We learned from sources that Aureus Investment, which is basically the promoter family, sold close to about 3% stake in the company. Vivek is back with us. Vivek, what are you picking up? It's the promoters who've sold stake, and they had more than 33%. They had around a 33% stake in the company.
Well, in a confirmation of a CNBC-TV18 exclusive, Sona BLW saw a very large block deal happen. Over 3% equity changed hands, during the trading session today. And this particular block happened at an average price of almost 507 rupees a share, a significant discount to yesterday's closing price. According to the term sheet that we had access to last evening, the promoter entity Aureus Investment was the likely seller in today's block deal. Remember, Aureus Investment held over 33% stake in the company at the end of the March quarter. Now, along with that, there was another interesting development in the company. Remember, the company will be part of the MSCI Global Standard Index, and on the back of that, the company actually saw inflows of close to $175 million during the trading session today. So, a very volatile, day as far as trading in this particular stock was concerned. Promoter pairing stake, as well as some inflows coming in due to the MSCI index inclusion cheer.
Okay, thank you very much for that. In the other important block deal which took place, HDFC Life rallied over 1.5% after a significant portion of equity changed hands. We learned from sources that UK-based investment company in Aberdeen sold 1.66% stake of its company in the life insurance company. This equated to 3.6 crore shares. The offer price was between 563 to 585 rupees per share. The reason the stock rallied in trade despite the supply from Aberdeen is because this is a clean-out trade. With this, Aberdeen no longer holds any stake in HDFC Life, so that supply overhang has now been lifted. Another important corporate development is Vedanta's Anil Agarwal, who played down concerns around the company's group debt. Speaking exclusively to CNBC-TV18, he said banks are very comfortable with the debt and they promised that Vedanta will be free of debt in a few years. But he did not provide any specific timelines. The stock was down 2%.
The other niggling problem is what's happening at Vedanta Resources, Mr. Agarwal. There are a couple of payments. I think in the near term, we're looking at a couple of reports that came out today. And the near terms, that's May and June payments, I think $500 to $700 million, that's been taken care of at the parent level. But I think going ahead for the remainder of this year, there's still a couple of $1 billion odd. How sure are you that you can make these payments? Do you want to give a message out to your shareholders? Because Vedanta Limited is not something that people worry about. They worry about Vedanta Resources making those payments. So can you clear the air?
I think we are very comfortable debt. Is always the case when people like us stand. We have to do 25% extra. When my daughter was studying in UK, I used to tell her, if you want 1-to-1, you have to do better than them. Same thing with us. We are very comfortable. We are the people who cash generate in the company. How can I give a dividend? The kind of dividend we have given, nowhere in the world people can even imagine. For me, nothing is more closer to me than the shareholder. And I always tell them and promise them that there is no question where the dividend will not flow, where our payment, it is even I don't even think that how the payment will be made, because we have a cash flow and this payment will be made. So as far as our debt equity ratio is very comfortable, our banks, lenders, everybody is very, very comfortable. My dream, my vision is, in few years, I will have a zero debt company.
That's the vision and the aspiration of Anil Agarwal, that in a few years, the group will have no debt. Get into a break, but stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. You're tuned in to Markets Today, the show where we track the day's trading action in 5 headlines. We ran you through the top 3 headlines, and this is the 4th one. Torrent Pharma jumped 6% in trade after reporting a 3-fold growth in the profits in Q4 compared to same time last fiscal. The India business has seen a big jump. Growth has improved to 22% on a year-on-year basis. Ekta is back with us with the highlights of the numbers. Ekta.
Thanks for that. Well, yes, Torrent Pharma reported what was an in-line set of numbers. Revenue was up 17%, margins 29%, profit over 300 odd crores. Now, one of the key growth drivers was India, which was up 22%, aided by the Curatio acquisition. US sales were flattish on a Q-on-Q basis, but there were other markets which grew, such as Germany and Brazil, which really compensated along with India for the sluggishness that we saw in US. Now, a couple of key takeaways. The Curatio margins have improved around 4 to 5% since the acquisition, likely to improve by 3 to 5% more. They have launched a new consumer health program as well to move prescription drugs to the over-the-counter segment, which means the likes of Shelcal 500 will now be available without a prescription and available over the counter. They will be adding more brands to it. They are optimistic on double-digit growth in India. For the US business, in talks with the US FDA on remediation for the Indrad unit. Brazil, like I mentioned, strong market, up 26% on a constant currency basis. Largest, most profitable segment for Torrent. Brokers positive. Nirmal Bang buy target price of over 1,700 rupees, and Antique as well has a buy target price is hiked to over 1,950 rupees.
Okay, thank you for that. Staying with Pharma, Apollo Hospitals gain on the back of reporting an in-line set of revenues for Q4. Margins, though, came in at a multi-quarter low. Managing Director Sunita Reddy told us that the focus right now is on cutting costs. She also added that Apollo 24/7 will reach an EBITDA break-even by the fourth quarter of FY24.
Definitely 15% growth in top line. We were trending at 18%, but I'm being very conservative and saying that we should, because if you look at the healthcare services, there has been, an 18% growth. And if you look at pharmacy offline, there is 31% growth and 42% growth in EBITDA for offline. So if you put the different components together, you will see a 15% minimum growth in top line and definitely 20% growth in EBITDA as well as profitability. We are looking at opportunities to improve, to fund some of the growth. And right now, I must say that our focus is on controlling the cost, which is happening very well. I think the benefit of this model is that it has the strong offline and the online presence. And even though we did incur losses this year, and we have for the past 18 months, we will reach a EBITDA break-even by the fourth quarter. GMV was over the budget with 1,630 crores of GMV, whereas we had budgeted 1,500 crores. We do have an opportunity to raise equity by the end of this year, some very interesting opportunities.
Okay, Apollo Hospitals for you, investing big in their digital arm, Apollo 24/7. That's the reason why their margins have compressed, but the management is confident about a break-even by Q4 FY24, and the possibility remains of some fundraise for their digital business. In more earnings, Lemon Tree Hotels gained about 0.5% on the back of a decent set of Q4 numbers. The chain has reported a 55% jump, 55% margins versus 18% same quarter last year. Mangalam is here with the key numbers. Mangalam.
Well, for Lemon Tree, the strong run continues for all the hotel companies. We've seen strong performances this time around, and that was no different for Lemon Tree as well. In fact, the company not only reported its highest ever revenue, EBITDA margins and net profit, it also met its expectations of revenues doubling and EBITDA margins of over 50% by a wide margin. If you just take a look at the revenues in the fourth quarter, year on year, they grew by over 111%. The EBITDA, take a breath, 550% jump is what we saw out there, and as a result of which the margins came well above that 55% mark as well. On the bottom line, the company reported a profit as against a loss of closer to 40 crores in the same quarter last year. Internals looked extremely strong as well. The average revenue per room actually increased by over 29%, closer to 30% as compared to pre-COVID levels, increased quarter on quarter as well. And we did see the occupancy increase both year on year and quarter on quarter too. And that is a heartening fact, and that reflected in the kind of numbers that we saw from Lemon Tree.
Well, we know occupancy has been running high across hotel chains in India. Manglam, but do stay on. We want to talk a bit about Patanjali Foods that surged in trade. I think the stock was up nearly 2%. The buying seen in the last 1 hour. Numbers were out. Looks decent. Top line growth of about 18%. But the absolute EBITDA contracted by nearly 20%. Yet there was this increase in the profitability. Can you take us through the numbers?
As far as Patanjali is concerned, their core business continued to remain weak, which is the edible oils business. Out there, we saw the operating profit decline by about 62%. But what did well for them were their growth businesses, the food and FMCG business, which actually, saw a benefit of them acquiring the Patanjali biscuit and other brands as well. As a result of which, the foods business is what led the growth. Despite an 18-19% growth in the top line this time around, we saw a sharp contraction in the margins, largely because of the oil business. The net profit was optically positive, largely because of one, lower tax, and secondly, lower finance costs as well. We spoke to the management today and they did guide for around 2 to 4% margins in their oil business with 3 to 4% growth. But the important part is the food business, where they expect margins to increase from 18% to around 20% and a revenue growth of upwards of 15%. The palm oil business can bring them about 100 or 1100 odd crores in terms of revenue as well. The only trigger now to watch out for in Patanjali would be over the next 30 to 60 days. The promoters will look at issuing new equity or perhaps selling their existing equity to dilute their stake to meet the minimum public shareholding norms. From around 80, a little over 80% stake that they have to bring it down to 75%.
Thank you for that. And let's get to the fifth headline. In a bid to increase transparency, market regulator Sebi wants more disclosure from high-risk foreign portfolio investors. In a consultation paper, Sebi has proposed that FPIs with more than a 50% stake in a single group or in a single company or a group will need to reveal the ownership details, and this has to be done within the 6 months. Failing to do so, they will face action. The move comes after Sebi told Supreme Court that it had drawn a blank in identifying the beneficial owners of 13 FPIs who had invested in the Adani stocks. Lata's here with more on the Sebi proposals.
Basically, the purpose of Sebi's consultation paper is they want to know who are the ultimate owners of any fund which has more than 50% of its assets under management in only one stock or only one group of stocks. That is the purpose. Their point being that they've observed many such funds which for a long time hold only one fund. Their fear is that they may be in cohorts, they may be linked to the promoters of that company which they are holding, and together they are circumventing the minimum public shareholding rule, and they may even control the price because most of the shares are with them. It is to stop this that they are bringing out this consultation paper, and they are making it very clear that this will apply to all funds which own more than 50% in one stock, but some exceptions: sovereign wealth funds, the central banks, these kinds of government pension funds, these are excluded. Also, very public funds with very large number of shareholders are also excluded as medium risk. All the remaining are high risk. And these high risk funds, if they have more than 50% of their AUM in one single group, they have to make all disclosures up to the last beneficial owner in that fund. Now, they will get 6 months to make all those disclosures. If they don't, the fund's registration itself will be considered invalid. And also by beneficial owner, Sebi is going to be a little more rigorous. They won't be happy if they just give the, it's owned by a company, which is owned by a company, and just the senior manager of that company is revealed. They want to know who holds the economic interest, the ownership and control of that fund. Also, in the consulting paper, they want to ensure that one of the government's rules called Press Note 3 is not circumvented. This rule requires that investors from neighboring countries like China or Pakistan will have to come only through with government approval. Sebi fears that this rule could be getting violated. So all FPIs which own a large amount, like over 25,000 crore of investments, will have to give additional information about the people investing in that fund. How much could be impacted? About 2.6 lakh crore of money invested in India are within this category. That is just 6% of the total funds invested. So, according to Sebi, this doesn't look like it will disrupt the market much.
Thank you, Lata, for that. And with that, it's a wrap in this edition of Markets Today. Thank you for watching.